Welcome to episode 7 of Forex Success Blueprint. This will be an interesting session. Here I shared an interactive session I had with my mentees where I explained the 3 components you need in your technical analysis toolkit. The question of how do I analyze the charts to know how to buy and sell, and when is the exact time for me to place my buy or sell order was answered in this video. You just need 3 basic knowledge about the chart that you must put together and you are good to go as a technical analyst. Know the drill already. Watch this video to the end and subscribe to my channel. Don't forget to drop your question in the comment section and also mention any other topic you'd like me to discuss. See you on the other side of my screen. Peace. For technical analysis, there are 3 components of knowledge. Everything you've seen on that PDF, there are a lot of things there, but there are just 3 components that you need, or 3 basic knowledge you need for you to be a good technical analyst. Number 1, you need to understand the market structure. Are you getting it now? That is number 1 thing you need to understand. So after showing you all these things, I'm going to put everything together and we'll analyze the chart you see. You need to understand market structure. That is number 1. Are you getting it now? Your knowledge of market structure is just, I said in one of the videos I did, that market structure is a study of market behavior. So understand, the study of market behavior, MB. That is what we call market structure. You cannot be able to analyze any asset or any market when you don't understand the behavior of the market. So that's number 1 thing you need for you to be able to solve this problem of knowing how to analyze the chart. Number 2 knowledge you need. The second one you need is this. You need everything you need to know about support and resistance. I get now. You need information. You need knowledge on support and resistance. I get it now. Some people even call it S and R, support and resistance. So you need it. Support can also be called demand. You can even call it demand and supply. Demand and supply. I'm going to show you why it is very important. Demand and supply. You need the information. You must understand demand and supply. You must understand support and resistance. You must also understand, you can even, some people even call it maybe POI, point of interest. POI, or you call it, some people call it area of value, AOV. Alright, so these things are very important. First of all, you must understand market structure. Number 2, you must understand support and resistance. You should be able to mark out your support and resistance level, or your demand and supply level, or mark out your point of interest or your area of value. Whatever method you want to use, you must identify a point, which is your area of value. Then the third component of your technical analysis is now candlestick pattern. I get it now. You must now have knowledge of candlestick patterns. Candlestick patterns. So I mentioned the 3 components that you need for you to be a good technical analyst. If you write this down, it's good. Maybe I might get this video across to you. Good. So you must have knowledge about market structure. You must have knowledge about support and resistance of demand and supply. You must have knowledge about candlestick patterns. Then after getting this information, the 4th one finally is now for you to now place your buy. I get it now. Your buy and sell. I get it now. All these things must be in place before you can now say, okay, I am buying, I am selling. Then you now start putting your stop loss and start putting your TP. Are you getting it now? All these things are the next thing, but you must get your market structure correct, get your support and resistance correct, get your candlestick pattern correct, then before you talk about buying and selling. So that is it. First of all, I already discussed. I'm not going to emphasize so much on market structure. You already know what market structure is. You understand? MS, market structure. I said it's the study of market behavior, and we know that the market can be structurized into 3 types. It is either the market is trending. Are you getting it now? It's either the market is trending, you know that, or the market is ranging. When the market is ranging, we say the market is consolidating. The market is ranging, or it is consolidating. You get it now? This is the first step for every analysis. This is the first step. I get it now. The first step you must be able to take is understanding the structure of the market at that particular point in time, or at that particular time frame, or maybe the market is choppy. We don't even talk much about choppy market because we don't trade it. I get it now. If the market is choppy, we just avoid it. A choppy market, to stay away from it. A trending market, you can trade a trending market, right? when the market is trending. There are two forms of trend. Either the market is trending up, you already know this, or the market is trending down. So these are just simple questions you should be able to answer. Then, if the market is trending up, you already know what these are the things you should be able to observe, right? When it comes to market structure, you don't even need to read so much for you to understand market structure. There are things that you have to observe. What I like Forex market is about what you see. You trade what you see. You react or you respond to the market based on what you see. I get it now. It is not based on what you think. The question of what are we going to do in the market now? What is your bias? I get it now. The Forex traders will ask you, today, for example, let us open a read chart. You are in a read chart right now. I don't just speaking so much grammar. The question of what is your bias? I get it now. What is your bias? What is your sentiment on this market? Your sentiment on the market has to do with what? Understanding of market structure. Your sentiment is where you now say, okay, my sentiment in this market is bullish. I want to buy. Are you getting it now? You want to buy. You only buy when the market is showing up. Now, for example, this is GBP/USD and this is 1 hour time frame. We could see how the market made a high here, made a low, made another high here, made a low. I get it now. We could see from our knowledge of market structure that GBP/USD is still on the uptrend. I get it now. It is still trending up. To understand, GBP/USD it is still trending up because it has been making the movement it has been making is movement of higher highs, higher low, higher high, higher low. I get it now. Even though here it has not made a high that is higher than this one, but it is still within. It is still trending above this trend line. I get it now. So these are the things you need to observe. How you have to train your eyes to observe that when the market is making this type of structure, you should know that the market is trending up. For example, look at how a very good uptrend market looks like. The market is trending up, it will be making this type of movement. Higher highs and higher low, higher high, higher low. I get it now. You know that this market is trending up. And in this case, what do? You look for buying opportunity only because the market is trending up. I get it now. So the first thing you do in the market as a technical analyst, I'm talking to you, Mohammed, right now. The first thing you do in the market as a technical analyst is to know the market structure. Is this market trending up or is this market trending down? So you need to be able to understand the structure of the market. It is very important. Whenever you open the chart, you should be able to look. By mere observation, I could see that GBP/USD currently is trending up. You can even check other assets to know what the particular trend of the market is. Do you know that if you can be able to get the structure of the market right, every other thing about technical analysis becomes very easy for you. You can be able to get the structure of the market right, every other thing about technical analysis becomes very easy. Let us check gold, SA/USD. Here, we want to be able to check and know what the trend of the asset is. This is gold, SA/USD, right? And then we are in 1 hour time frame. I get it now. Even more on the upside. I get it now. It is still more on the upside. If you switch to, we have different time frames here where you can switch from one time frame to the other time frame to check, to get information about the structure of the market. If you switch to 15 minutes time frame, you see that it becomes more quick. Market is actually trending up. You could see from 15 minutes time frame that this market is actually trending up. It has been on the uptrend. Are you getting that? This is exactly what we do in market structure. Then if you've been able to identify that the market is trending up, that means you've answered every question about market structure. The market is trending up, right? That means you are looking for buying opportunity. If the market is trending down, you should be looking for selling opportunity. You already know how the structure of a downtrend market is. Because remember that this is Zoom, I have video on this already. All you need to do is just to watch that video and ask questions. A downtrend market, you make lower high, lower low, lower high, lower low, lower high, lower low. You see that if you bring a trend line, you see that you see a downtrend line, show you that each of the lows that the market is making is lower than the previous low. The market keep on making lows that are lower than the previous low, and the highs the market is making is usually lower than the previous high. I get it. That is how to know a downtrend market. If you are able to observe this type of structure, that means you've answered the question of you know what the market is doing. That means the market is selling, and when the market is selling, those that are in control of the market are the sellers. And if the sellers are the ones that are in control of the market, what do you do as a retail trader? You literally have to sell. That's something I was explaining to my students in our Forex Academy today. Very important. I was trying to tell my students that I, Dennis, and all of you here, we are all retail traders to you guys. throughout the whole journey. So I rather take time and explain some concepts so that we get the reason why. I want us to always know the why of every decision you are taking in the forex market. Now, I was telling that guy, he's a student in Nnamdi Azikiwe University. Today I was explaining to him that when it comes to economics or business studies, I know we used to have, there are people we call manufacturers. I get it now. From manufacturers, the next people we are going to see are going to be some sellers. The next people we are going to get in the chain are going to be, that will be retailers, right?
Yes, sir.
Yes, retailers. From retailers, this is where you are going to get maybe the final consumers, yes, or the consumers, something like that. Now, when it comes to, let me just do this thing. When it comes to the forex market, the same thing applies. In the forex market, you have those referred to as the big boys. I call them the big boys. These are the big boys in this forex market. I don't know, the reason why I call them the big boys is this. If you made proper research, you know that the forex market is actually the largest market in the financial world. When it comes to the financial market, the forex market is the largest. Why? Because the market cap of the forex market is around $7 trillion. Look at this, the amount of money that is traded on a daily basis on the forex market. And this makes it the largest financial market. And most of you don't know that in the financial market, you have crypto market, you have forex market, you have commodity market. You even have a lot of other markets. You have static indices market. I'm getting now. But forex market still remains the largest market in this financial trading world. Now, these $7 trillion that are traded on a daily basis, the big boys are the ones that are contributing more than 80% of this amount of money that is traded on a daily basis. You have the big banks that understand all these things. These big banks just be a company that will just bring money together. I get it now for them to be able to trade the forex market. We have financial institutions, big financial institutions. These guys are the big boys in this forex industry. They are the big players, financial institutions. Yes, financial institutions. Yes, apart from these financial institutions, we still have the central banks of big countries, central banks of big economies of the world. Like, just imagine the central bank of United States or the central bank of London or UK, or these big economies. These guys you are seeing here, they are the big players in this forex market. They have enough money, enough capital to be able to move the market. Are you getting now? They have enough capital to be able to move the market. But we, I and you, we are just retail traders. That is what made me to bring that illustration. Mohammed, I, and every other trader in Nigeria or any other day trader you see, we are just retail traders. Why are we retail traders? Somebody was even arguing, even with your $100,000 account, even with your $1 million account, you are still a retail trader. You cannot be able to move this market. Because even if you have 20 million as your trading account, you are still a retail trader. Because 20 million is not even up to 0.01% of 7 trillion. I get it now. Are you seeing how big this amount is? 7 trillion, your $1 million. You can't be able to move the forex market. You can't be able to, your money is not enough to move the market. Just imagine you and I, some of us are even trading $50 account. I know also forex traders that the account is $20. I get it now. $20, $100, $1,000, $50. This amount of money is still infinitesimal compared to the amount of money these big boys are pushing into the market. So what do we do then? What we do as retail traders is not to move the market. Our goal as retail traders is just to be able to identify and see early signs and predict where these big boys that have the big money, where they are pushing the market to. I even forgot to add institutions. Yes, financial institutions. Yes, I also wrote them down here. Where we want to identify where they are moving the market to, right? Then so that we'll be able to join and make small money and disappear from the market. I get it now. That is exactly what we do. Now, if we identify the structure of the market this way, we know that these guys are pushing the market to the upside. We know that the people that are controlling this market, this video, I sent everything. This move here is the impulsive move. Why this one here is the retracement move. This is the impulsive move. This is the retracement move. So stage number one, we want to be able to identify what the market structure is. We know how to trade an uptrend market. If the market is trending up, what is your goal? Your goal in an uptrend market is for you to be able to catch these impulsive moves. Buy and catch the impulsive moves. You make more money catching these impulsive moves than trying to catch these little retracement, corrective or pullbacks.
This particular move here is what we call retracement move. You can even call it corrective move. You can even call it a retest, or you call it a pullback. I have a video where I explain all this. So in an up-trend market, it becomes easy. Do you know the reason why we tell our students, like if you're a newbie in the Forex market, we always tell you that the trend is your friend. If you are able to identify what the trend of the market is, it becomes very simple for you. That is market structure. Step number 2, you'll now be able to mark, since you've already known, for example, you've already known what the trend of the market is. That means this market is going up. You can still lose money if you don't know where the correct place for you to be able to join this up movement. For example, let us assume that this is the structure of a particular asset. Let us say it is gold or GPUS. It is trending up like this, obviously. And then this is where the current price action is. Some traders, because they have been able to identify that the trend of the market is up, the market is bullish, now they will just jump and start buying from here. This thing does not make any financial sense. One thing is knowing what the trend of the market is. One thing is knowing that the market is bullish. Another thing is knowing the right place to be able to enter. This is just like you, a bus is moving with a high speed and you want to jump into a bus that is already moving. It doesn't make sense. What do? You have to wait for the bus at a bus stop. Are you getting it now? You already know that this market is moving up, reason so high that if you buy there, you're not going to make enough money. You want to buy low. Are you getting now? What do we do as Forex traders? If I meet the market, and this is the structure of the market I was able to meet, and the market is already buying and it has got to this level, what do? I have to wait for the market to pull back at a particular place. Are you getting at least? It's just like, let me use Bitcoin for example. So now, just like the price of Bitcoin, I know that there was a time that Bitcoin actually bought to as high as maybe $70-something thousand. Let's just assume that the price of Bitcoin has risen to $70-something thousand. Is it a wise decision for you to go and buy Bitcoin at $70-something thousand, $72,000? No, it doesn't make sense. What do you want to do? You want to at least wait and identify the next support level where Bitcoin is going to find support. You want Bitcoin to pull back to at least, even if it is 70, let it pull back to at least $70,000 so that you now be able to buy from 70. I get in and make profit. Because if you rush and jump out of excitement, you know that the market is buying, you just jumped into this buy at a high price. The market might use you to do pullback. The market will use you and pull back, and you lose a significant amount of money. I understand what I mean. So one thing is knowing what the trend of the market is. Another thing is identifying the best place to buy. And the best place to buy is at support. Have you seen why I say that the concept of support and resistance is very important? You've seen it well. So now, identifying support and resistance can be complicated sometimes, depending the nature of the market structure will also help you to know how to identify. Now, if the market is trending up in this way, we already know that resistance level, the one we call R, resistance level, it's just, yes, that point above where the market has fed to be able to break is what we call resistance level. Now, if the market makes a move like this and turns down, this is resistance. If the market makes a move like this and turns down, this is resistance. That point above, I think I have done a video on support and resistance. If I have not done, I'm still going to dedicate a full session on support and resistance. So as to understand, you must be able to understand the concept of support and resistance if you want to know the best place to actually buy from. Now, if you judge from this market structure, bulls pulled price up, that is the buyers push price up here, and then there was retracement from here. This is something like resistance, right? Then this impulsive move pulled back. The market now made another impulsive move and broke out of this resistance and formed a new resistance here, and then pulled back and turned this resistance into support. Are you getting now? Created a new resistance here and then broke that resistance again and came back to form into a support. Now, let me explain this in this way. Whenever the market makes this type of movement, it forms resistance, pull back, break that resistance. Each time the market breaks resistance like this, there's high possibility that it will turn this resistance to support. I get it now. Then break the next resistance. That's how the market trades. Then here now turns it to what? Support. I get it now. So this concept is very important. And these areas of support is where we want to look for buying opportunity. We want, when the market makes a higher high, we are waiting for the pullback. We want to catch the end of the pullback, right? So that we'll be able to catch a very good opportunity for us to buy. I don't know that this is making sense. I want you to take time and watch this video again. I am using an uptrend market to do this illustration. Then if this market is trending up this way and I met price here, where do you think I should buy from? I want to wait for the market to pull back to at least around this place where it has broken in the past. This is where we use a rectangular line to mark this area where the market has broken in the past, right? This is the best place I want to buy. Buying on top of this place is wrong. I want the market to at least slow down a bit into a support level so that I'll buy from the support level. And then I'm expecting, when I buy from the support level, I want the market to now make a new impulsive move. Then a new person like this, let's just assume that Mohammed was able to take advantage of this buy from here. Then when value came, the price has gone up to this place. Value will not rush out of fear of missing out, FOMO, and start buying for it. He has to wait for the market to pull back again, because the market will always pull back. Are you getting now? More often than not, the market will pull back into this resistance level where it has broken previously, right? And then continue moving. If somebody else, maybe Precious, made the market here, Precious will wait for another pullback into an area here for him to join. So that is how we buy in an uptrending market. So, right, I've mentioned two things: identify market structure. Number two, mark out your area of support for a buy movement where you buy from. Let us now assume that this is the area of support we've marked and we are waiting for price to come back to this area. Now that is now candlestick pattern. If price definitely pulls back into this place, what else do I need? I want to see a candlestick pattern around this area that will show me that the market is actually going to buy from here, because it is possible that this market will break this place. I get it now, and change what you think will be a pullback will turn to what we call change of character, and the market will start trending down. So at this point now, your sentiment is no more. You that is waiting for a buy here will be disappointed because there was no entry. The market has changed sentiment, so you should be looking for sell, because the sentiment of the market has changed. That is the importance of candlestick pattern. Candlestick pattern is giving us the final signal. So the first question is, what do we do in the market? Are we buying, are we selling, or are we waiting? Your understanding of market structure will now tell you, okay, we are buying. Why are we buying? Because the market is trending up. How do I know the market is trending up? From the market structure, it is making series of higher highs and higher lows. So the market is trending up. So my sentiment for this market right now is bullish. I'm going to buy. Number two question, where do we buy from? Since we've all agreed that we are going to buy, where do we buy from? We want to buy from our support level. We want to buy from area of value. We want to buy from point of interest. I get now. So you can use your support level, mark out the support level. This is the place we want to buy from, right? That is it. We know where we want to buy from. So what makes us a forex trader is that we want to mark out this place and wait for the market to come to it. How we operate as forex traders is that we operate like snipers. Do you understand? We operate like snipers. We want to patiently wait for price to come to us. We don't chase price. Like me personally, if I mark out my area of value or my point of interest or the place I want to buy or sell from, nothing will make me take any decision unless price comes there. That is why they will tell you that patience is key in forex. That forex is 90% waiting and 10% trading. Are you getting now? Forex is you have to wait a lot. So when I marked my area, for example, let us now assume that everything was perfect and this my area I marked head. For example, let me delete. This thing is going to be closing very soon. We are running out of time, around 1 minute. Good. Let us now assume that the market pulled back into my area. Let me delete these things now. If the market now pulls back into this my area perfectly, what do? I don't just jump into buying already. I want to wait for candlestick pattern. If you watch my video on candlestick pattern, you must have known the type of candlestick pattern that signifies the presence of buyers. I want to confirm that buyers are actually here by getting rejection candles. There are different types of rejection candles I can get here. This type of rejection. Okay, I can even get doji. I can even get bullish engulfing. Are you getting it now? I can get bullish engulfing. This is a candlestick pattern I will see that I will know that yes, the buyers are actually here. then I'll now enter my buy after getting my final confirmation. Then put my stop loss here, and I'll target the next impulsive move. Do you understand? And put my TP. And my goal is to make sure that I get at least 1:2 risk to reward ratio. Are you getting it now? This is how we do analysis. Is this in 100%? No, nothing is 100% in the forex market. But